Welcome to this week's edition of the Regtech Africa News Roundup. And here are the top headlines for the week. CBN implements measures to counter Naira decline. Federal government's Greenlights 154 digital money lenders tightens regulations. Telecom spending reaches 3.86 trillion naira due to increased video streaming and calls. FIRS initiates implementation of Revised Finance Act 2023. Kenya Central Bank allots license to 12 new digital loan providers. Visa unveils Africa Fintech Accelerator to nurture startup ecosystem. Bank of Ghana warns against Remittance guideline violations. United Kingdom PSR proposes £415,000 cap for APP fraud reimbursement claims. Wirex collaborates with Sumsub to ensure virtual asset compliance and transaction security. Now the news in details. The Central Bank of Nigeria, CBN, has introduced foreign exchange intervention measures aimed at curbing currency speculators in the foreign exchange markets. The CBN issued a circular to authorize dealers, international money transfer operators, and the public, placing limits on the exchange rate for Naira payouts of Diaspora remittances. The circular directs that the Naira payment option for proceeds of Diaspora remittances should be within a limit of -2.5% to +2.5% of the previous day's average rate on investors and exporters window. The federal government, acting through the Federal Competition and Consumer Protection Commission (FCCPC), has unveiled a new list featuring 154 digital lenders that have received full approval to operate within the country. Along these, 40 lenders received conditional approval, 20 were placed on the watch, and 9 applications were delisted. According to the Nigerian Communications Commission (NCC's) 2022 Subscriber and Network Data Annual Report, the amount spent on telecom services in Nigeria reached 3.86 trillion naira in 2022, primarily driven by the heightened video streaming and talk time. The expenditure marked an 18.74% surge from the 3.25 trillion naira spent in 2021, illustrating the sustained growth in the nation's reliance on telecom services. The Federal Inland Revenue Service (FIRS) has officially launched the implementation of the Revised Finance Act 2023. The FIRS urged tax professionals and the wider public to pay attention to the amendments, particularly those related to the Value-Added Tax (VAT). The Finance Act 2023, which was ratified on May 28, 2023, encompasses modifications to various sections of the tax laws. Let's go for a short break, and when we come back, the news continues. Now, in Africa news. The Central Bank of Kenya, CBK, has granted licenses to 12 new digital lenders, expanding the count of licensed digital credit providers in the country to 22. Among the newly licensed lenders are notable names like Tala, Mkopa, Tenakata, and Zanifu, as reported by the national newspaper. Visa has introduced a program aimed at fostering Africa's burgeoning startup landscape. Visa unveiled Africa Fintech Accelerator on Wednesday, June 14, to offer support to up to 40 startups annually, focusing on business expansion and mentorship. The launch of the accelerator follows Visa's commitment 6 months ago to invest $1 billion in Africa to accelerate the continent's digital transformation. The Bank of Ghana (BOG) has issued a stern reminder to participants in the remittance sector to adhere strictly to established regulations or face significant penalties. The central bank gave this caution in an official communication, noting that any failure to comply would result in substantial sanctions, which could even involve the revocation of the license of any institution found in violation. In world news, the payment systems regulator PSR in the United Kingdom is considering implementing a maximum reimbursement cap of £415,000 for victims of authorized push payment (APP) fraud. The PSR, which finalized its stance on addressing APP fraud in June, intends for the vast majority of victims to be reimbursed within 5 days of reporting the fraud to their bank. The new reimbursement requirement is set to take effect in 2024. In light of the Financial Action Task Force's FAFT regulations on Virtual Asset Service Providers (VAPs), which emphasize anti-money laundering AML standards, Wirex is partnering with Sumsub to ensure seamless compliance. The solution by Sumsub enables secure data transfers for the travel rule between virtual VAPs, incorporating all essential KYC checks, AML screenings, and verification orchestration in alignment with both regulatory guidelines and Wirex operational demands. Join us again next week for more updates.